every night are we paradise, paradise seems so far away. Still I try to buy myself some time to get me to that place. All I want is you. Staying up till we want to. Tell you what, I bet that we could see it new. I wanna let you, nothing to lose. Let's throw all our worries away.
Good morning, traders. Welcome back to my YouTube channel. My name is Richie, aka the Crocodile Way. I am a Forex trader. I document my journey here on this channel. So if it is your first time, please consider subscribe, like and share my channel to your friends so that our community will grow. Without any further ado, let's get into it. So here traders, I'm going to show you my trading strategy that I use on a daily basis. Here I identify the market structure, and as you can see here the market is bullish. So I mark my levels, and you can see that the market is changing structure, and then it broke the structure. So it confirms that the market is quite in the bullish. So I just took my Fibonacci 2 and then I draw it from the left to the right, and then I identify the 71% level, which is the discounted level that I will use to enter. And then it is crucial to identify liquidity before the market goes up. So when I identify my liquidity zone, you can see that the market broke structure with a higher momentum, that it leaves an imbalance that needs to be filled right there, which we call a fair value gap. So that fair value gap, it needs to be filled. So I just buy limit at that area. So as you can see, the market just comes and then that fair value gap, and then it took us. So another example now, based on the bearish structure, as you can see, the market changes character just right there. It changes character. So when it changes character, it then break the structure downwards. Uh, when the market breaks the structure downwards, it confirms to us that the market is now bearish. So I confirm my area, my higher low, and then my lower low, so that I will put my Fibonacci 2 from the left to the right, and then I mark the levels, the premium levels that I'm going to sell on, which is 71% level, with the fair value gap inside it, so that I put my sell limit right there, and then you can see the market goes down. And here is our account on my FX book, the tool that I use to track my record every now and then. So you can see that we reached the maximum trading days, which was minimum trading days of 2, and now we are at 6 days. Then our account is 1.52% up as for now, and then you can see the progress just right here. FX book shows you a in-depth of your trading, even the equity curve, how you was trading, the trades you was taken, and then how long does the duration of each trade you took, and then any of the analytics you took, the in-depth of how you was trading, and even the trading ratio you was using. My FX book shows you everything for free. This is the tool that I use every now and then. On another example, let me show you another example tra- of of the trade on trading view that I use to enter the market. Here is another example on the GBP As you can see, the market broke structure just right there, which is called change of character. It changed its character, it was bearish, and then now it is becoming bullish on the 4 hour time frame. And then we just mark the hour bottom zone and the upper zone with a Fibonacci 2, a 2 again that we use to enter to refine our trade. Fibonacci is not a strategy, but it is part of our strategy. As you can see, the market took off, leaving a fair value gap. That's right at a discounted level. It is crucial that you identify the fair value gap, because this is a liquidity that the markets need to grab before it move upwards or downwards. So here the market was going upwards, so it need to fill this fair value gap so that it will move upwards. Liquidity is a fuel that the market uses to move. Mm. Just as you can see here, was a perfect example of the trade that we took last week, March. And then another example here on Euro USD. This is the trade that we are on right now, which is not moving quite favorable because it took a lot of days for us. It took the whole of last week, and then as for now, the trade is moving not favorable to us just because of the tension that is happening in the Middle East right now. As you can see here, we mark our zones, and then we mark the market took liquidity just right there. The market is moving downwards, we drag our Fibonacci 2 from the left to the bottom, so that we see where is the discounted level, where is the premium level that we need to sell on, which have got a fair value gap inside it. As you can see here, the market clearly breaks structure that's right there, and then we put our sell limit at 71%, stop loss at 100%, take profit at 0%. And then now I can see that the market is creating a double bottom. Maybe it need to move a little bit up to grab some liquidity, and then it will go down and take our stop loss party. This it is show this movement that it is doing right now. It's like it want to change direction. I can see how it is moving right now. As you can see, another example here on this pair. As you can see here, it is crucial that you identify fair value gaps so that you refine your trades when you enter your trades. Here, the market just tap in our fair value gap, and then it didn't go right away to 71% level. As the market broke structure, it changed structure just right here, and then broke structure. We just mark with Fibonacci 2, and then we see where is the discounted level. But here the market just hit the 61% level, which is again the discounted level. Sometimes we use it, but nowadays for the favorable risk to reward ratio, I only use the 71% level. So this trades, we put a sell limit at 71% level, and then the market misses, the price misses our trade just right there, and then took off without us. So this is another perfect example of the market that I use to enter trades and refine to enter refined entries. Thank you. If you are watching me for the first time, please consider subscribing, like and share this video and recommend it to everyone, so that our content will grow and we can improve